네, 구사일생의 알리바바 그리고 트위터의 대주주가 된 일론 머스크 이야기까지 외신 브리핑까지 좀 듣고 왔습니다. 이번 시간은 월가 트레이더 버니씨의 이 시장에 대한 분석을 들어보는 시간 가져보도록 할 텐데요. 미국 시장이 굉장히 지금 흐름이 좋다곤 하지만 긍정적인 흐름만 나오고 있는 것은 아닙니다. 2년물과 10년물 미 국채 역전 현상이 일어나기도 하면서 실제로 미국 주식이 건강한가, 이 시장이 건강한가에 대한 이야기들이 분분하게 나오고 있는 상황인데 미국 시장에 대한 흐름을 이야기를 좀 바로 들어보도록 하겠습니다. 함께 보시죠.
Well, when we think about the stock market as a whole and what's going to happen to the stock market down the road, we want to think about a couple of things. And one of the things that we understand is that the Federal Reserve wants to raise interest rates. We know that they want to end the liquidity providing mechanism that they've been using to be able to buy mortgage securities and buy treasury securities, fixed income securities. So when we think about all this, we want to understand, is this going to be a growth slowdown, which will be a great opportunity to buy stocks, or is this going to cause us to dip into a recession? Well, let's step back for a minute and think about the drivers for a growth economy. What's important? And obviously wage growth is really critical. As long as wage growth keeps going up, well, that's a huge positive sign for the economy not going into a recession. So this chart right here that we've taken a look at, okay, looks at the difference between the Fed funds and the wage growth. So as this chart goes down, wage growth basically underperforms or goes down more than the Fed funds rate. So the Fed funds rate is outperforming, the Fed funds rate is increasing faster than wage growth. As this ratio on the red line goes higher, the Fed funds rate is going up slower than wage growth. The economy is still benefiting. And you can see that there's a pretty good correlation, generally speaking, with higher wage growth in terms of being able to identify times when the stock market does really well. What we don't want to see is a big decline right here, because a big decline basically leads to a lower stock market down the road until we figure this out and provide more liquidity. This is taking away liquidity into the market. This is still adding liquidity into the market, because as long as wage growth is going on and is doing better than interest rate increases, that probably means that companies are still making money. Let's take a look at the next chart. Now, when we also think about what got us to this place where the Federal Reserve is increasing interest rates, or wants to increase interest rates. Well, we know that for the last 10 years they provided a tremendous amount of liquidity, particularly after the onset of COVID. This red line is the 10-day smooth average, and the blue line is our daily number of days that it takes to be able to anchor and drop off your shipments. So we had peaked up here at the fourth quarter of around 30 to 35 days it took a ship to be able to dock and offload its equipment. Well, if a ship usually which was able to dock and offload its shipment in a matter of 2 to 3 days, now takes 35 days. Well, we can't use that ship and be able to deliver more equipment, send it back out, deliver more equipment, and in fact reload it with stuff and deliver it out there. So that has a propensity to slow the economy down significantly. Well, now we've started to relieve a lot of that congestion already. So that's a positive sign. So when we think about reasons to raise prices, and raising prices means I can't get access to product, this is one reason why over time we may have less reasons to raise prices. We still have product shortages and all that in various different industries, but we have to think bigger picture of like what happens in the cause and effect. And the cause and effect of being able to access more product means that there's less delays at ports. Now, one of the things that we think about is, okay, is an economy slowing down? Is the economy picking up? And then what effect does that have on the stock market as a whole? So if we look at the economy and we say, let's look at our purchasing manager survey, which is an index we get every month, and we survey purchasing managers at all these big corporations, and we say, okay, what are your new orders looking like? Are they better than last month? Are they worse than last month? And then we take that and we look that and we compare that to, do we want to have a, let's call it a risk on, risk off methodology. Risk on means we're willing to take on more risk. We're willing to buy more stocks. We're not willing to buy fixed income. We're not willing to be defensive. We're not willing to buy precious metals because we're concerned about anything. Or do we have a risk off methodology or concern? And in essence, are we very hesitant to buy equities? And would we rather have our money in fixed income and precious metals like gold or things like that? Or in other words, we're very concerned about what's going to happen down the road. And if we look at these two lines and we compare the new orders index, the dark blue line, to the risk on, risk off thought process, we can see that as new orders are higher, we're willing to take on more risk. We're willing to buy more stocks and not be protective or defensive about our portfolios. But as that new orders decline substantially, we're very concerned about the market. We don't want to own equities. We'd rather put our money in defensive investments like fixed income and precious metals. Well, right now what we've done is we've turned over, after the big pop we had with COVID, we've turned over, and the issue now is, where does this line go? How deep of a decline? And we have to monitor things. I don't think at this time we're going to have a deep decline. And if we can just hang out sort of halfway here, just below the midpoint of this thing, and then start to roll our way back up, we're going to see much more risk on methodology or risk on activity as opposed to risk off activity. And going back all the way for the last 10, 12 years, we can see that there's a lot of times that we stop right around here. So we don't want to get this going on. This is going to be a big problem for us. But if the market can stabilize here and new orders start to pick up again in the second half of this year, I think that's going to be really positive. That's going to be a growth slowdown in the first half of this year, and then start to pick up. The quality of earnings will improve, the level of earnings will improve, and that's going to be reflected because new orders is going to stop going down and start going back up again. What we really are concerned about when we're in a defensive posture in the stock market is that we go into a recession. Recessions are not good. That's negative growth in the economy, and it will be reflective in lower prices. But growth slowdowns are tremendous places to have buy opportunities. In other words, we get that 10 to 20% decline in the stock market. That's a great buy opportunity, and 3 years out, that market is much, much higher. Let's take a look at our last chart. So when we think about where we are right now and we think about risk on, risk off, let's look at indications that we truly have risk on, risk off. And one of the ways that I look at it is taking a look at the liquidity in the markets. So when we take a look at the stock market and we look at the U.S. stock market and we look at bids and offers in individual stocks, how much are people willing to buy? Are they willing to sell anything because they're lower prices? Do they have really good bids, or are the bids terrible? And in cases up here, okay, we have on here on the blue shaded line, we have high levels of quality bids, quality offers, lots of liquidity, market's doing very well. That's great. The stock market probably can go higher in conditions like that. When we lose our liquidity and the market goes into periods where we have very low liquidity, and we can see right here what's happened to our liquidity. And this has happened because we have 50% of the NASDAQ stocks are down more than 50% from their highs. We have very low liquidity. These have provided great buying opportunities because what happens is you're the only buyer out there, and when they get done selling and they're scared, we're going to reprice really quickly. So we can see all these occasions where when liquidity goes down, if you purchase when you have no liquidity, which is buying them when everybody else is telling you they're very worried about the market, and you hold on for some period of time, 3 to 6 months, you've tended to really outperform the market, and you've really been able to make great money. We are in that period of time right now. So when we think about, go back to previous clip, and we think about the new orders, are we really going to fall off now, or have we already done our fall off right here? And I still think we could chop around down at these levels for a little bit, but I do think the market's still going higher.
네, 버니의 미국 주식 같은 경우는 저희가 노란톡 통해서도 열어두고 있고요. 다시 보고 싶으신 분들은 서울경제TV 유튜브 채널에도 올려두도록 할 테니까 많은 시청 부탁드립니다.